Hello, everyone, and welcome to another episode of Financial Advisors Want to Know. I'm Catherine Tindall, a CPA here with Dominion. We're a specialty tax and accounting firm for advisors. And on today's episode, I have Chelsea Rustek. She's an enrolled agent, which if you're not familiar, that's the other tax professional designation besides CPA, specializing in individual and small business tax preparation. Her background also includes stock options, compensation, and IPOs, helping clients mitigate tax risks and burdens. She and I got connected through a tax professional community that we're in because she has a foot in both worlds of tax work and financial advisory in the firm that she works in. So I thought it'd be a great conversation to talk about her experience integrating, having both of those things integrated in one practice, what that's looked like for their clients, and just how those pieces can play well together. Because it's a common question that I get from advisors of, hey, should I go for my EA? Should we try to bring tax in? And so I thought this would be a really good conversation to have with Chelsea to learn more about kind of what's been working for them and her experience there. So thanks for joining me today, Chelsea.
Yeah, thanks for having me. Really appreciate it.
So it's funny. I feel like I get this question like a couple times a month from the advisors that I talk to where they say, I've been thinking about going for my EA because I want to start integrating tax more, but I don't feel that confident in it, or like they're not sure that they can pull it off. What, for that question, what's your experience been like kind of with a foot in both worlds and what you say to that?
So as everybody says in accounting, it depends on the person, I think. Mm-hmm. So I've worked with financial advisors who are just really sharp, really in the weeds, really detailed, and they don't really want to talk about big picture. They don't want to estimate that kind of stuff. Mm-hmm. Those kind of people really thrive on the EA designation. But there's other ones that are just here for holistic planning, and they want to talk about where you want to go in your life. They want to talk about your retirement. They want to talk about things maybe estate planning. And so I think that it's really dependent upon each person in their practice and who they are, and do they even like this stuff? Because one of my bosses loves it, and the other one, who's a financial planner, is I don't even want to talk about it. Don't even show me your spreadsheet.
Spreadsheet away. I don't want to see it. Yeah, and I think that's such a good point, because I think for a lot of advisors, it's well, do you enjoy doing your own tax returns? And if the answer is no, then probably not. It's one of those things when I address this question with advisors, I come to it from the perspective of, okay, well, what kind of practice are you actually trying to build in terms of the firm infrastructure, and with the personnel that you have, or the personnel you have access to, are you going to be creating a lot of operational drag adding this element in, where it's not going to produce a lot of margin for you unless you're able to, you have a niche within a client base where you can either do this in a high margin capacity because they're really, really easy returns, or they have some complexity like what you have with the IPO and stock options planning, where it is high value compliance, and there's a lot of nuance there where the financial advisory work really needs to integrate with the tax planning work. Otherwise, everything blows up.
Yeah, for sure. Totally agree with all that. Second it. And I'm there with you.
So I think it's, what kind of practice are you trying to build? And then The second question is, what personnel do you have? Because I have people where they say, oh, well, maybe I'll hire in a CPA to come do things. And I'm like, you realize this is a completely different business in a lot of ways. And so unless somebody's going to own it, really own it, you're going to get dragged into having to run a business that you don't necessarily know how to do it, because it's really technical in nature. You're dealing, unlike with advisory work where, you have year end where certain things have to get done by. With tax world, we're always in rolling deadlines. Yep. There's legislative changes that you have to keep up with. And then there's also a completely different tech stack. You have to get tax software in. Yeah. If you don't have a really full service document collection service, that's a huge issue for tax work, as well as collecting all the documents and managing that. So it can just create a lot of operational drag if you're not up to size.
Yeah, I mean, that's what I do for Landon is I maintain our UltraTax. They use my EFIN. They use, I create our WISP. I maintain it. I have an IT system. I have a virtual office platform. So I handle all that for him, but it is like having another firm. It is truly like a separate entity. So he says, he's like, you do your tax world and I'll do my financial planning world. So it works, but you do have to have somebody that can really hit the ground running.
Yeah, who can really own it and,
Yeah.
isn't going to run into a problem and come back to you and say, "Hey, I don't know what to do," versus, "Oh, they got this notice back. Like, let me go call I'm going to call the practitioner line. Like, we'll go get this sorted." Like having people who can handle the blowback from things too, especially with the current environment that I've been experiencing with the IRS, like the level of things blowing up and
Yes.
the IRS screwing things up and knowing enough to say, no, I got to stand my ground. Like, we're going to take this to appeal. Like, this is what's going on. If you don't have a seasoned tax professional who knows how to make those calls, it's, you're signing up for a lot. So for advisors,
California disaster relief was a hot mess.
oh gosh, yeah. Oh, anything California, it's like, it's brutal. They're between them and New York. I don't know like who's worse.
New York.
Yeah. New York's pretty bad. Especially New York City. It's like
New York City.
So if you take a deep breath in New York City, like get ready for a tax. They're gonna come in and claim you've got residency. Yeah. You drove through the city and you were breathing here.
Yep. You owe me taxes.
We'd like to apportion some of your income. But so for advisors who are like, okay, I have a niche where it makes sense. Maybe I have somebody where it's a CPA or an EA that we've had a close relationship with. Could you talk a little bit about, when an advisor is thinking about like really, really partnering with a tax professional, some of the things that maybe they should be thinking about, like what's worked well in the relationship that you've had in the firm you're in, or just things that maybe they should be considering if, they haven't operated at this level with a tax professional before, where it's really an integrated partnership?
Yeah. So I think like first and foremost, I'll go back to, it has to be somebody that can really do it all. And so that doesn't just mean preparing your tax return. They got to talk to their clients. You have to trust them with your clients. You have to be able to do representation. And like people ask me questions about estates and trusts and payroll, and I can't just say no because I'm our tax manager. So I think that's first and foremost is getting somebody that has like that wide depth of knowledge is really important. And trusting them with your clients. That was something really difficult when I first came on, was like advisors tend to have really deep relationships with their clients, which I think is awesome. But with that comes the downside of I'm going to have to let go of these clients a little bit and trust my tax manager to handle them. So, other things was just at some point as tax professionals, we do have downtime. And so as an employee, there's going to be times where you need to fill their time. And so I don't just like do our tax returns and then all of a sudden fade away. I like do our Canva, I do our social media, I do that kind of stuff. And so I think it's also an opportunity as an advisor to look at the person and say, what else do you like to do? What else do you want to do? What do you want to contribute to the firm besides just doing my tax returns? So I think that's really important to consider when you're hiring somebody.
Yeah. And I think that first point you made really hits home to me too, because I've seen this happen so many times where when you have it as an integrated service model like that, if something goes wrong on the tax side, you've now jeopardized the entire relationship.
Yeah.
So it's one of those things where, like, I had an advisor ask me, he was like, well, I've got, like my mom semi-retired, like she could pick up some returns. And I'm like, you realize if she screws this up, the whole client engagement is at risk, not just the $200 tax return. Right.
Yeah.
So that's a really big issue. And I love that point you made too of the downtime and utilizing the downtime well. Because if you have people where they are really just purely niched on just the tax work and not really any of the advisory work, like being able to implement them into different areas of the practice too. And it makes for a nicer balance and like catch up projects and things versus, I think for a lot of tax professionals, I've heard a lot of tax professionals where they are operating in the dual model and they love it because it just gives them the opportunity to spread out the year and have a less crazy volume during tax season because it's not all of what you need to make your bread on. And then you have projects during the year that are completely different. Like you're dealing with marketing and Canva and other things that really round it out and in a lower burnout environment than your like typical CPA firm, tax prep firm where it's
nice to have like that mental break from like looking at numbers all the time. And I'm a numbers person, but it's really nice to have the break.
Yeah, especially if you've been doing it for a couple months straight when it's tax season. It's nice to get the break. So
like, people exist.
Yeah, it's like there's a whole world outside my office. So for advisors who are thinking about bringing in a tax professional or a tax professional thinking about joining with an advisor firm and really partnering in an integrated way, what have you seen as common mistakes that people have made in other practices that you've been around, or like pitfalls that people should be watching out for when they're considering going into an arrangement like this?
I think they underestimate the setup time. So they think like as soon as their tax professional comes on, they're going to be able to put out work. And so like I came on and then a month later they were like, oh, we're in extended return deadline. So our tax software is ready, right? And we made it work, but it wasn't great, right? It wasn't a good client experience. It wasn't our best work. And we've had time to perfect that, but I will say it took probably about 2 tax seasons to really perfect like where we're at. So I would always say that whatever you think it's going to take more than that. And be really open to change. So like we totally rehauled our new client process, our intake process. We implemented a lot of new softwares, and it took give and take on both sides because they were using Asana and we needed something different for the tax side. And so it took a long time to implement all this stuff and get it working and get it changed. And there's always still moments of contention, right? Like they're like, I still like Asana better. And I'm like, well, that's tough cookies. We're using Carbon.
Hey, I'm a Carbon firm too. I'm with you on that one.
Yeah. So it's hard in that sense. So I would say like that's the number one thing that the advisors really underestimate. They just think they have like this magic wand and they can say, oh, you're here now. So, okay, go work.
Here's 150 tax returns. Like, can we see them next week? Yeah.
Yeah, exactly. And like they think just because they have this tax professional, they're not going to be having to do work. But like my advisors still have to review my returns because if the client asks them a question, they have to know. And so I try to take that off of them, but it does still mean work. And probably when you think that you're hiring a tax professional, you're like, I'm not going to have to do this anymore, but you still have to touch it.
Yeah, no, that's a good point. And then I guess when people are initially rolling this out, I imagine instead of doing hey clients, now we can do all your tax returns, it's probably more a selective process, right? Of like, let's just test with a batch and get, some things through and then every season get more ambitious with it. Like, is that how you would recommend people going about implementing this? Go for it, or just make sure you've got everything set. Yeah, just set up 6 months in advance and then just straight into the season. Hey there, Catherine here. Thanks for listening to the conversation. Just wanted to explain a little more about what we do. So I'm a CPA here with Dominion. We're a tax firm that works specifically for financial advisors as they're growing and scaling their practices to help them avoid tax waste, make the right calls, and grow practices that they love. So if you're interested in saving more, you can DM me on LinkedIn with the word guide, and I'll send you over our guide for financial advisors to scale tax efficiently. All my top tips to unlock 6-figure savings. Thanks, and keep enjoying the show.
Yeah, I would. So I had a really unique experience where I was contracting out with a third-party firm for my firm. So it was kind of like they got to work with me for 2 whole tax seasons before I came on as their dedicated tax manager. Okay. And so they already knew me. And so I'm like, yeah, in that case, we took on all the returns because it just made sense. But I could understand the fear there, right? Like letting go your clients, having the trust. So maybe in my thought, I would still pull the trigger on pushing forward all those people and say, yeah, I'm going to do your returns, but maybe I would stay client facing the first year and say, I'm still your touch point. I'm still the person you're going to talk to, but we do have somebody that's really qualified here to help out with the returns. And then if, it goes really well with the tax manager, start releasing that client relationship a little bit more each year and year.
Yeah, no, that's really great. And I guess in your process of doing this with the financial advisory firm, have there been certain points that were like breakthrough points for them in working with you, like the aha moments of like, oh, okay, this is, like we have to change the practice management software, like we have to use something more guardrailed than Asana? Like, are there certain moments like that maybe they didn't realize bringing this in-house, those aha moments of benefits that they might not have seen up front, or just like kind of breakthrough insights that you can share?
Yeah, so Landon always says like the number one thing that I did was I streamlined all their processes. And so normally when you talk about a client, they have their tax professional and they have their financial planner. And even if they work together, it's still two different processes. It's two different softwares. And so I created a process where they could do their annual plan update and they could also do their tax projection at the same time. And so it combined two things, and we introduced a new software where they could do it all like on their mobile phone, and then we could do it remotely. And it like revolutionized our firm in like a way that clients saw a lot of value. And then we started implementing things like Loom. Like I introduced that. So, they could get reviews of their projections. And now our supervisors are like, oh, I'm just going to use this all the time. They're just like, they need to be scaled back a little, but
that's what happens with Loom. You're like, I never have to meet with anyone ever again. Let's just do Looms for everything.
Like you guys are like, kids, we need to take it away for a little bit.
I'm like that with Loom. I abuse it. But what's the platform that you guys moved on to that was integrating both the planning?
So it's JotForm, which I know it's like, this is not a revolutionary software. Like anybody can pick this up and do it. But our clients have loved doing it with a mobile interface. They've loved the way it reacts. We love the way it reacts. We can build it out, customize it. And so we love it. It's great. We can get pay stubs. We can get all kinds of information from them all in one foul swoop. They can save it, come back to it. So, and they're busy. They don't want to have to log into our portal and upload and then fill out another questionnaire and then go over to eMoney and go fill out eMoney. So it has revolutionized the process here at the firm to make it easier on the clients. And that's always the end goal, right? Let's make the clients happy.
Yeah, that's great. And I'd love to hear a little bit too about how things have worked out for your firm, because in our original conversation before this was even brought up, I was really intrigued with the fact that the firm that you work with has a pretty specific niche in the client avatars that they work with. And that the specific niche with like the stock options and equity issues dovetails really nicely with the tax work. So I'd love to hear you talk a little bit more about how having a niche has impacted the integration on the tax and the planning side, and just why you think it might be a bigger benefit to have both when you're dealing with certain client avatars.
Yeah, sure. So I do a lot of SEO work with my bosses, and we're really big into blogging. So the nice thing about the blog is, as a financial advisor, maybe you're specific on investments like concentrated wealth and mixing that up and separately managed accounts, and how do I handle my investments in that term with stock options. But as a tax professional, there's a lot. And so with stock options, they can go wrong really easily. And so, the blog kind of is like this landing place where they can get all of that information. They can say it and see tax information. They can see financial planning information. And we brought out from there just advice in general, right? Career advice, because tech is so volatile that, career advice is really important. So having the tax professional there, we've actually been able to expand our SEO and our exposure as a financial advising firm by bringing both together. So I think that that's been one huge benefit. And then, the clients really value when you're in a niche that you can speak to it, right? You're not just fluffing it up. You're like, hey, I deal with this every day. This is normal. Somebody else might get this wrong, but this is just a normal day over here. So I think like the clients really appreciate that, and they're looking for somebody to say, I've got your back. And so we're here for that. And so once they meet us and they get to do some work with us and we onboard them, they just feel like such a like sigh of relief, because these niche people are so hard to find, and they're like looking for you. They're like, please make my life easier. And I'm like, we're here for that.
Yeah. No, and I bet a big part of it too, at least for the advisors in the sale process, you can verify if this is a true hunch or not, but what I found, at least being a tax practitioner, is, filing tax returns is a non-optional process. Like you have to do that. And for people, when they have these stock options and these crazy W-2s and like crazy stuff going on, a lot of them are hesitant to DIY that. And for you as the advisor, if you can get people, not like get people in on that, but just people can always procrastinate on financial planning. Like there's no government mandate that you have to deal with it until they get RMDs and stuff like that. But people could just procrastinate that forever. Versus they can't do that with the tax. Like you can't do that with a tax return. And so it's a really different conversation when somebody is coming in and it's, hey, you're going to have to meet this compliance requirement. We will do that for you. But in addition to that, you have all this planning that needs to happen that we don't have a deadline for, but we want it integrated with the thing that is centered around the deadline and, forces the hand on making the process happen when it should, instead of, you've got somebody where I've had this situation happen, which will make you cry, is I had a client a couple of years ago who approached us. She had a bunch of stock options and didn't do the right elections, didn't do the right things. And so the stock ended up going to zero, and she had paid income tax on it, and basically was stuck with like it was like $500,000 capital loss that was just stuck.
It happens.
And so for her, it was like the whole piece around the tax planning, but then also like the wealth management side of it. Like why was she so concentrated in this one position? Like that was a significant portion of her wealth in this company that just went bust out of a tech bubble. And if she had more integrated planning and tax planning that was niche specific for her, she could have avoided that whole thing. But she didn't.
Sure.
But she didn't.
We see that a lot, right? You're just like, you get devastated for them. Like we're both accountants, right? We feel it for them. Like we didn't get into this business to just do taxes. I came in it to help people. And so watching a $13 million account go down to zero because they wouldn't sell, I feel like a broken record. I'm always like, yeah, you should sell now. Now.
It's the worst. I know I get no glee from telling somebody that they're, they've got a tax bill due. There's no sick enjoyment out of that. It's just ridiculous. But any other, so I guess before we wrap up, for people who are interested in the practice that you're in, what's the best way for people to get connected with you, Chelsea, and the team that you work with?
I'm on LinkedIn really frequently. I haven't been since I'm in Florida and I have hurricanes, but recently, no. But I'm on LinkedIn pretty actively. And so I'm always checking my messages there, and you can connect with me. I post updates on there. I post updates from our social media page, KB Financial Advisors. So if you want to learn about stock options, you can go there.
I suggest you do. They're a good thing to learn about. So any final thoughts before we sign off, Chelsea? Anything you want the dear financial advisors who have made it this far into the conversation to come away with today that we might not have said?
They can reach out to me if they have any questions. I think that adding tax to their firm is invaluable to their clients, honestly. So that's my final opinion.
That's great. And it's one of those things intentionally done, right? If you can do it, if there's a strategic, intentional decision around it, and not something that you're just like, well, maybe we should do this. It's like, no, really plan it out. Because it is like adding in a different business into your current business. But
for sure.
So I want to thank you so much for joining me. And then for those of you listening, we'll post nearby wherever you're interacting with this, the links to how to get in touch with Chelsea, how to get in touch with us. And I'm always interested in hearing feedback. So please send me a DM on LinkedIn and tell me what you thought about the episode and maybe any spooky stories you have about tax situations. I'm always interested in hearing about
Me
that.
too.
But so thanks again for joining me, Chelsea. And this was another episode of Financial Advisors Want to Know.